Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Jim, the Resource Juniors had an unusual week, and I'm going to talk a bit about what might be going on. And also, two of our favorites, Vista Gold and Solitario, also had an unusual week, and I will try to explain what happened.
What's driving the increase in the TSXV resource listing trading volume and value?
Most of May, the volume and traded value for resource listings ranged from 45% to 60% of total value. That was down from earlier this year. The non-resource listings were dominating. They were following the whole cryptocurrency trend, money moving into that sector. But this week, something changed. On Monday, June 2nd, the TSX Venture exchange traded volume surged to 193 million, and of that, 141 million shares and $88 million worth of value was attributable to the resource listings on the TSX. That's the highest traded value since January 31st, 2023. Another interesting statistic, the trading data that I have is for the exchange traded volume and value only, but there are also these alternative trading systems like Alpha and Omega and Pure and so on. And the total volume has been very, very high, running 400 million on yesterday. It was in fact 451 million compared to 223 million total for the TSX Venture, and it has been running anywhere from 50 to 80% of the official volume, which most traders, investors, when they trade and see the chalk marks and that, they see that volume going through the TSX Venture. So I don't have a good explanation as to why so much volume is going through these alternative trading platforms. What ordinary investors trade through is the exchange itself, but the trend is paralleling. And I've noticed something interesting about the type of trading that I'm seeing. For example, it's not like there is a collective inflow of money. It's more of a pulsing type of activity, and we'll see some bottom fish stock that's been plugging along at 8-9 cents. All of a sudden, it surges up to 16 cents in one shot, and then it goes back to sleep. What I think we're seeing, it's like a start your engine type phenomenon. There's a big race coming, and people who are watching this are getting ready. And a lot of investors, we've been spooked by the 12-year bear market that seems to run forever. We're spooked by the fact that gold is at $3,000 plus, yet there has been very little trickle down into the resource junior listings. Even the advanced companies, ounce in the ground type stocks such as Vista Gold, they are nowhere trading near what they should be trading at $3,000 gold. We're the new reality. But what we're seeing is individuals on the sidelines. They seem to be experiencing a quickening of sorts, and they say when it's game on and everybody knows it, the offers in the book are just going to disappear. So what we're seeing is a pulsing type market where an individual says, okay, I've been watching this stock. I'll go in there and buy 50 cents up to 16 cents. I don't care if it's back to 9 cents tomorrow. I've got that position. I've got others. I have more money. I'm going to add to that position later, but I want this core position. And we're starting to see this happen, I think, with all the serious companies. My KRO favorites index is now up 21.7%. The top performer on that is still Sunrise Energy with its Scandium project. It's now in that voting period for approving this big private placement that's going to start further work on the Syerston project. In second place is Aclara Resources with its ion absorption clay deposit in Brazil. And every day now there is a news article about how China's sort of paperwork restrictions on exporting a certain group of rare earths are causing severe problems in the United States and in Europe, which isn't even targeted by this, because the exporters are trapped in this. What exactly are we supposed to fill out? How do we not get in trouble with Beijing? And of course, the trade conflict between the United States and China, although they've dialed it back, there still is no resolution, and absolutely nothing is being done for this handful of critical minerals who are a tiny fraction of the total value. And Vista Gold is in there at actually in second place. Aclara was third place, and that's after being knocked down this week by a round of volume, which we are going to talk about later. But what's really interesting is my bottom fish collection, which has 110 members companies. The favorites collection has only 24, and those are largely graduates from the bottom fish collection. It's up 48% as of Thursday, and we're seeing rising volume again. So people are looking at these better quality companies. They've made their short list, and they're starting to step in, but it is by no means a widespread inflow of, everybody's realizing it's game on and coming in. Now, I've cried wolf on this before, so I'm cautious at the moment, but last week I talked about Vista Gold and Solitario Resources opposite end of the gold exploration and development spectrum, and suggested if you're new to this sector, these are the first two stocks that you should buy. And both of these had unusual activity this week.
Why did Vista Gold drop on heavy volume this week?
Well, Vista Gold had an unusual news release come out, not by the company, but it came out on Friday, May 27th, and it was by Sun Valley Gold, which is a fund that has a master fund that investors can have a piece of, but it also has discretionary accounts that it manages, which are separate from the fund. And it put out this news release that it had transferred or distributed 3,424,217 shares that had been in a discretionary trading account, and it had basically given that back to the party, which was now on its own. And because of the way the rules are, if you have discretionary trading authority over a group of accounts, you also get to apparently vote these, and so you have to add them all up. So at the start of the day, they had 19.9 million shares. Now, of that, 13.7 million were in the master fund, and another sort of 3 million were in these discretionary accounts. But after they transferred discretionary account to this entity, they had a total of 16.5 million left under administration. And the market saw this, and Peter Palmetto has been a big supporter, a big gold bug. And I've talked to him. No, he remains very confident about the gold uptrend. He believes that the current prices at a minimum are here to stay. Higher prices are coming, and he has all these investments in stocks like Vista Gold and Westfall, both of them favorites, and he's waiting for when this next bull cycle happens where the producers start to acquire these companies in order to develop them. But the market may have seen this as a loss of confidence. On Tuesday, the stock was down 9 cents at $1.16 on about 1.2 million shares, and this is on the NYSE Amex exchange. But then on Wednesday, it traded 5.7 million shares and dropped all the way to 91 cents. And yesterday, it traded 1.5 million shares, closed at $1, and it's still a little weak today, but the volume is lower today. So what is going on? Did that party to whom Sun Valley Transfer Trading Authority liquidate those shares? Well, it turns out the amount of shares that were liquidated shows up in some sort of shareholder register, and it matches a New York Stock Exchange, multi-billion-dollar conglomerate company that has had this, position under management by Sun Valley for a long time. And we have no idea why they wanted the discretionary authority revoked and take it back to themselves, or even why they needed to liquidate that. But it appears to be a one-off sale. The fact that it pulsed on Wednesday, and of course others fear there's something wrong and they sell also, but then has suddenly subsided in the past couple of days. I think this was a liquidation event that probably had nothing whatsoever to do about the outlook for the gold sector or for Vista Gold. And for anybody who saw the stock go from sort of 90 cents on the dollar, several weeks ago, surge up to $1.20, 30 level, this is a buying opportunity. It is unrelated to any change of fundamental developments. Vista Gold is still on track to come out with its smaller scale feasibility study in mid-July, which will open it up for the mid-tier producers to consider taking out. So nothing really has changed to explain why this happened. The fact that it happened, the big sale was on a day when gold was actually up, tells you that this was a liquidation event that was confined to probably this 3.5 million shares. And with this out of the way, the uptrend can continue. And I've made available an updated discounted cash flow model. And really the stock should be trading, if you were to take the seriously $3,300 gold price that we have, the net present value per share works out to about $27 to $41 per share. And obviously, you should only really take 75% of that. But even then, if you're taking sort of a $10 to $20 range as your target, when this awakening happens where people stop fearing gold's going back below $2,000, this stock, Vista Gold, will move up dramatically, end up on the radar of institutional investors who will recognize that it's now game on for a bull cycle and probably a big M&A cycle, and then start trending towards that $10 to $15 range, where we might, even before it gets that, see a lucrative offer from a mid-tier company, though this won't happen until after the updated small-scale feasibility study is out in mid-July. So there is still this window here for ordinary retail investors to get their heads around this story, get a base position, and be in a position to make some rapid gains that can be recycled into other juniors farther down the food chain if what we're seeing this week in the broader resource junior sector as a type of a quickening start your engines, if this is real and not some bizarre temporary phenomenon, now's the time to get serious about owning these resource juniors.
Why did Solitario spike to 97 cents on New York on Monday?
Well, when you look at the trading data, it shows only that the stock was in the sort of 63 to 69 cent range, but traded 1.5 million shares on the New York Stock Exchange AMEX. And when you look at the sort of trading history for the past month, this stock typically trades, 66,000, 80,000 shares. Now, Monday was the day after I published my Kaiser Watch Substack update on Solitario, spelled out the timeline. They had said they would be drilling by May 27th. That actually was not the case. The roads proved too muddy to use to move the rig onto the site. But the rig is now on site, and the start of drilling is imminent. So this timeline of hoping that by mid-July, early August, we're in a position to start getting assays from the first target. This timeline is in action. I'd like to imagine that somebody read my piece and said, oh, it's time to own this, even though fundamentals won't change for another, 1.5 to 2 months. But what was strange was that the volume was relatively small, only a couple 100,000 shares during the regular trading hours. It was about a half hour after trading closed that suddenly volume came in. And this is where most of that volume took place. It was after hours trading. And this is the confusing thing about New York. Trading does continue after hours. Who actually gets to do it? I'm not sure. But the stock did run in the first 20 minutes of when this after hours trading ran all the way up to 97 cents. And somehow somebody was able to grab a big position, and by the time trading fizzled out, the stock was back at 69 cents. And, and in the past couple of days, volume on Tuesday was 385,000. On Thursday it was 107,000, and yesterday it was 190,000. But the price range was back into the 65-70 cent U.S. level, and there was very, very little corresponding volume on the TSX exchange, where it trades under the symbol SLR as opposed to XPL. So whatever that was about, I doubt it was somebody with a short position in a panic to scramble to cover it. I think it was somebody who just for whatever reason knew there was going to be some after-hour selling coming in and got a big position. And this ties back into what I was saying at the start of this episode. People are starting to get off the sidelines. It's isolated. They do their buying and they go away. I've called it kind of the popcorn effect before. With that, what I mean is individual companies actually suddenly pop off the bottom and then keep going. I think this has started to happen. The fact that the bottom fish index is up 48% with 110 companies in it. This is a sign that the market, the investors are coming back, but it's still on a selective, isolated basis. But for people who are watching this sector, now's the time to get serious and start picking your favorites, and pick the ones that you think are going to move sooner or later. Because as I argued last week, I think it'll take 2 years for us to really reach a frenzied market where pigs and turkeys are all flying, where all the boats tied to the dock have risen with the tide. Because it's been such a long bear market that started in 2012, it will take time to bring back the audience. The tape will have to be painted with lots of big wins for everybody to be convinced, oh yes, this sector is hot, it's trending, and it's 27, 28. That's when I think will be the big blow-off period where everybody thinks it's impossible to not make money in it. And that's when we should be starting to retreat and resist having felt like the geniuses we will have been demonstrated by looking at this sector now and taking positions and selling, some too soon, some too late, by recycling this the proceeds into these couple hundred of good companies that all won't leave the harbor and go out to sea at the same time, but which you can see the signs. They're starting their engines, there's fuel going into the tank, and each one pushing a story of some sort to create fundamental new wealth.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.